Hi everyone, this is Ardi from Bearable Traders, and I wanted to do a quick recap of some of the trades I did today, mostly using options. So, last week was a very volatile week in the market, right? We talked about it in the chat room. If you were with us in the chat room, that the expected moves, the realized volatility was a lot higher than implied volatility. The market was a lot more vicious. But as we were coming closer to the Friday, it seemed like that the market is kind of calming down, and the majority of the trades that I set up on Friday, which I executed some of them today, was based on that same thesis. So as you can see, my trade log here, with the trades that I took today, and some of them again are for my personal account, covered call for some of the longer term holdings, but some of them are pure speculation, right? And speculation could be directional or a bet on volatility. But two trades really kind of stood out today, and that I want to talk about them in this video, and hopefully it's kind of helpful for everyone else to kind of see the thinking, see the logic, and then people can make trades like this as well. So one of them was an iron condor on Shopify. So let's kind of talk about this. Let me bring up this slide deck here. So whenever you want to do a condor on any stock, right? In this case, we're doing it, I did it on Shop, and I set this up on Friday. You want to answer three main questions, and these are really important, right? What is that stock's volatility profile, right? Is the implied volatility increasing? Is the implied volatility decreasing? Is it higher than historical volatility? Is implied volatility still elevated? So you want to really understand that stock's volatility profile before you set up any condors or short strangles, right? Because these are the strategies that are bets on volatility, right? They're not directional, therefore you're betting on the speed of the market. So you have to nail down this first part really well. Second is, what is your exit strategy? So if the trade doesn't go your way, when are you going to cut it? When is the pain point for you that you're like, okay, I want to exit this trade. This wasn't my trade. And the last thing is, of course, your hurdle rate, meaning what is your profit target? At what point are you going to exit this and you're happy with the outcome? Because again, as I've said it before in the chat room, very rarely you hold a contract all the way to expiry, right? In this case, in my case on the condor that I did on Shopify, I exited the trade. I set it up on Friday and I exited it today. I still have some left, but I exit half of my position today because it met my hurdle rate, and that's exactly what you want. You don't want to fall in love with a position, especially if it's making you money, right? So let's take a look at Shop together and answer these questions one by one and see why I did this trade. So Shop really held on a technical level, really hold that 200 moving average, as you can see right here, really well. Stock gapped up, and it seems like now it's kind of on the trend. The volume is tapering off, right? So these are really good things, especially when you're betting on volatility tapering off, right? These are good. And then you kind of analyze, what you want to do is you want to analyze the volatility profile of this stock, right? And implied volatility, as you can see here, is on the way down. It came up a little bit, but still on the way down, and it is elevated, right? So it is still higher than a historical level, and this is really good for you because when you're doing condors, you want volatility to slowly taper off, but you also want it to be high enough for the premiums to be worth it. So with that logic, Shopify seemed like a prime candidate for me, right? Especially and my strategy was exiting it on a Monday or a Tuesday, especially because Wednesday we have inflation numbers coming out, and it might make the market a little bit more volatile. So you want to be really careful of what are the info that are coming out. And I did the next week, October 13, 15, 16, 10, and 1170 condor, right? So the majority of the bet is Shop is going to be somewhere around 13,000 to 1,300 to 1,500 within the next few days, right? And this is exactly what's happening. It's just hovering around this area. So this was a successful trade. I still have one contract left, which I'm planning probably to sell it tomorrow before the inflation data comes out. And then another trade that I did was a buy right on mRNA. So this one is also really interesting. So let's bring this up on the chart, right? You can see mRNA has sold off pretty heavily, right? When you look at technical levels, you look at RSIs, it seemed pretty oversold, and it seems like the stock is holding this 293 level, right? Touched it once here, twice here, 3 times here. So on a daily, this seems like a strong level, and then we have a gap at 272. So what I did, let me bring up, I did a buy right, meaning I bought 100 shares of mRNA, and immediately after I sold some covered calls on it, and planning to exit by the end of the week. So bought 100 shares of mRNA, I think at $310, so at 31,000 buying power engagement, and immediately sold end of the week 320 calls, right? And $595 was the premium, so I collected $595. Now when you do buy rights in general, it's really important that, you know how I said in the condors, the important thing is understanding volatility profile. Well, when you do directional based plans and trades, it's really important that you understand the return profile. So the volatility profile is really important for non-directional trades, but the return profile is really important for the directional trades, right? So what is the potential returns here, right? If I bought mRNA at 310, it goes to 320, the assignment happens, I lose the trade, my share gets called away at 320, I've made $595 plus $1,000 profit on the trade, right? And I only engaged, like my exposure, basically my notional exposure was $31,000, so that's a 5% return in about a week, right? I take that. That's a really good return. That's a good risk that I want to take. Now, what is the potential downside, right? Potential downside, and that's my exit strategy, is if we break this 293 level, right? If the stock can't hold this level, right, and we continue to go lower. Now, this is, you're losing 1,700 on your 100 shares that you have on mRNA, but you still have collected that 595 covered call that you sold, and your exposure is about 31,000, right? Because that's 100 shares of mRNA. So you lose about 3.5%. So when you look at this return profile, this is the type of trades that I want to take, right? And this is really important. So on directional bets, you really have to understand the return profile, and on non-directional bets, you really have to master the volatility profile of the security that you're trading. Hopefully this helps. On Tuesday and Thursday at 11 a.m. Eastern time, I hold about a 1 hour time as a moderator in the chat room. We talk about these option strategies, we talk about volatility. So if you're in the chat room, definitely come by. If you have any questions, ask, and hopefully everyone found this video helpful. And if the feedbacks are positive, we're gonna keep them coming. It would be awesome if you can like and subscribe to our channel as well. Thanks again, and see you tomorrow in the chat room.